Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, November 11th, and today was Veterans Day. So thank you to everyone who has served or is currently serving. And this week, inflation, interest rates, and the Fed are in focus. We do have CPI on Wednesday and PPI on Thursday, and we did open SPY with a small gap up today. This first candle, we did make new all-time highs. We broke 600 for the first time with a high of 617 cents. And that first candle was the high of the day. We did make all-time highs here, and then we dropped back into the red. And really fast, I'm going to switch over the 5-minute time frame. And you could see that over here, it was the 5-minute 200 moving average that did catch us. So we did, once we gapped up, we did drop back into the red, and the 5-minute 200 moving average was the level that caught us. And it did bring us back into the green, and we did close flat today. And same thing over in SPX. We did open with that little gap up, made new all-time highs at 6,017. And then from there, we did pull back into the red. If we did switch it over the 5-minute time frame, you'd see that 5-minute 200 moving average is exactly where we flipped around, and we brought it back into the green, and we closed flat today. So stupid Willie in both. We did see overbought conditions to start the week, and that did play itself out with how flat we stayed today. And SPY did close up 0.1%. SPX also up 0.1%. VIX closed up today 0.2%, and we did actually start the week with VIX being up around 4%, but it did cool off into the end of the day, and we did stay within the implied move in both SPY and SPX. And hopefully you saw my video this morning, which did show you where you could get these charts. Even though I didn't make a full video, these charts were out on TradingView, so hopefully you found those trading ranges if you wanted them. And then switching over to QQQ, over here we did open up as the first move. You can't see the gap, but we did actually gap up, and then we dropped into the red. So after that first candle, we spent the entire rest of the day in the red, and we dropped down to the 35 EMA right here, bounced back up, and we did actually close down over here, down 0.06%. So also a flat day over here. And VXN did close up almost 3%, 2.74%, and we did stay completely within the implied move over here. And IWM has been outperforming all the other indices, and without a doubt, it is making a run for all-time highs, which is just a little bit outside of the implied move for the next 2 days, actually for today and tomorrow. And it is around 244.5. So zooming out to the 5-year chart right here, you can see that gap up that we started the week with here. But right here is where we have all-time highs at 244.46, and we are just underneath that. That is going to be in tomorrow's trading range. So that is going to be an interesting level. If we break out above that, then we may see higher, but that also could be a wall, and we could see a lot of selling at that level. And then, so let's actually take it back to the 30-minute time frame. So we did open the week and day today with a gap up, and we took it all the way to the top of the implied move, which was 241. And we chopped around 241 for the entire day, and you could see that we closed at 241.70. So if you did take 241, 242 bear call spreads, then that would have actually closed down today about 45 to 50%. That would have been a bad play on the day. But if you did choose the next strike out, which has been my game plan lately, especially when the implied move and the 30-day average are about twice as wide, I always look to that next day strike. So if you took 242, 243 bear call spreads, those would have actually closed up 100% on the day. So IWM did close up 1.5%. RVX, the Russell Volatility Index, up almost 5%. 4.65% at close, and we did not stay within the implied move on the day. We did stay within the implied move of the next day, but for today, 241, we closed a little bit outside of that. So holding strong above that election gap. And then DIA also had an update today. We did open with a gap up above previous all-time highs, and then we pushed to near the top of the implied move. So we did make new all-time highs today with that first candle, and then by the second candle we were dropping back down. And this is something right here that has been a strong overbought signal every other place that I've observed it. So when this 35 EMA takes it all the way into the green during a trading day, this often signals overbought conditions, extreme overbought conditions. You could see right here, we got the overbought signal here, but we weren't quite done. But this right here, that push right here, that could signal a pullback here. Let's see tomorrow if that plays out, because I would love to have found a signal that really does give reliable pullback signals. So 35 EMA got into the green. Let's see how that plays out tomorrow. DIA closed up 0.66%, and we definitely stayed within the implied move on the week. All right, really interesting start to the week. I hope you guys all had a green day. I actually didn't have any of my orders fill at all today, and I had a bunch out there. So I was on the sidelines for that reason. But we have a lot of trading to go this week, so let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions, please ask me in the comments below. I will get back to you, and in a lot of cases I do have resources that I can share if you aren't understanding something that I'm saying. And if you took a really great trade based on something I said or something that you learned here and you want to give back and help support my channel, there is a thank you button underneath the video that you can use, and that all goes back to helping me find more time to bring more content to you guys. Alright, so starting in SPY, tomorrow's implied move is between 595 and 602, and that is from options. The 30-day average volatility is $3 wider in each direction, between 592 to 605, and the implied move on Wednesday's contract is between 594 and 604. And to the upside, the first level to look for is going to be where we made new all-time highs today. We did make new all-time highs with that opening candle, and then we came back down a little bit, but that is just a little bit above 600 at 617 cents. And then above that, the top of the implied move is 602. Top of the implied move on Wednesday's contract is 604, and that is the day we have CPI. And then to the downside, we do have the 35 EMA. That is just underneath us. It is in the bottom of the implied move, not underneath it tomorrow. So that is a level we will likely see tomorrow. And if we do break it, then the bottom of the implied move is 595. 594 on Wednesday's contract for CPI. And underneath the next 2 days trading range, we do have this up gap from last Thursday. Last week we had two up gaps. We had this one from the election the day after, and then Thursday right here. And the bottom of that gap is at 591, and that is about it for tomorrow's trading range for SPY. Taking it over to SPX, the implied move over here is between 59.65 and 60.35, and that is from options. 30-day average volatility 59.35. to 60.70, and Wednesday's implied move is between 59.50 and 60.55. And to the upside, same thing over here. We have all-time highs. We did just make those today. If we get above that, then 60.35 is the top of the implied move, and 60.55 is the top of the implied move on Wednesday's contract. So because I do trade SPX, I do like to look the night before at which strikes I might be looking at, and depending on how we open, because we have CPI tomorrow, I think that this looks like a really small trading range. Sure, it's possible that we stay in the middle, but I still, when we have something like CPI, I like to get a little bit further out. So as of right now, I'm looking between 60.55 and 60.70, and with a high likelihood that I will look to 60.60, 60.70 bear call spreads. So up here, just a little bit above that 60.55. And to the downside, we have the 35 EMA right here, and that is just underneath us. Very likely that we will be testing that level, and if you look down here on Stupid Willie, you could see that we did get a little rejection right here, which does point to that 35 EMA. So I am expecting we do see that level tomorrow, and if it breaks, then 59.65 is the bottom of the implied move. If we get down to that level, I would be looking to 59.50, 59.40 bull put spreads on the day. And I am missing a level on this chart. We do have this right here. That is the up gap from last Thursday. So after the election right here, we had a gap up and we ran. The next day gapped up and ran as well. So we have this gap right here. That is at 59, I'm gonna call it 59.25. All right, so that is SPX, not a difficult trading range for tomorrow. QQQ, we do have an implied move over here between 510 and 518, and that is from options. 30-day average volatility is a little bit wider, between 507 to 520. So $3 wider on this side and $2 wider up here. And on Wednesday's contract, 508 to 519 for CPI. To the upside, we do have the all-time highs that we did make today. That is at 515.58. If we get above that, then the top of the implied move is 518, 519 on Wednesday's contract. And then underneath us, we have that 35 EMA. We did bounce on that today. So far it is acting as a support. And something I did notice today is when we did hit that 35 EMA, we also got a simultaneous oversold signal right here. So secondary indicator did support a bounce right there, but momentum is still down. So if we do come back to that 35 EMA, and break it, maybe this time we won't see an oversold signal and we'll take it to 510. 508 on Wednesday's contract for CPI, and then the bottom of this up gap from last Thursday is at 505. So remember, the bottom of up gaps tend to be supports when we do come back into them. So 505 would be a good strike if we do start seeing some downward momentum. And then right here, this is where we had the previous all-time highs that we saw back in, I believe, July. I'm not going to scroll back, but the ones that we had from earlier in the summer. All right, so that is the trading range for QQQ. It does not look difficult for tomorrow. It's more about knowing where the levels are. And then IWM. IWM is just underneath all-time highs. And actually, after I go over the implied move here, I'm going to go in and put in those all-time highs because I don't have that in there. So the implied move for tomorrow is 238 to 245, and that is from options. 30-day average volatility is 236 to 248, 247 I mean, and 237 to 246 on Wednesday's contract for CPI. So to the upside, we do have this resistance right here, and I don't know why I have this right here. Let's adjust that, because let's move that up to where the all-time highs are, which is at 244.46. So give me one moment. 244, there you go. So 244.48, nope, 244.46 is where we have current all-time highs. That does go back to 2021. So it's a very long time resistance. This is the first time we've come back to that level. Actually, let me go back to that 5-year chart. So right here you could see this is 5 years, and in 2021 at the top of November here we hit all-time highs, and we are just now coming back to that level. It is a very long time resistance, huge level we have in tomorrow's trading range. So 244.46 is within tomorrow's trading range. It actually lines right up with the top of the implied move, which is 245. We do have a bearish divergence here, so I would think that if we hit that level, and I do think we are going to hit that level, 245 or 244.46, whatever all-time highs are at, I do think we're going to hit that level. I think that's what this is all about here, and we will hit that level. But we do have a divergence here, and it's very possible that we do pull back after we hit that. That's not what has to happen, but it might be wise to take a little bit of profit at that level, as it is a major resistance. So 245, top of the implied move, 246, top of the implied move on Wednesday's contract. If we get to the top of the trading range for tomorrow, I would be looking to 246, 247 bear call spreads on the day. This just looks too close, and the fact that we could push through that tomorrow, I wouldn't take 245 bear call spreads. So I would look to 246, 247, and then underneath us we do have this up gap from today with that 35 EMA in it. So bottom of the implied move for tomorrow is 238. Bottom of that up gap is 237. It's actually closer to 238 as well. 237 is the bottom of the implied move on Wednesday's contract for CPI, and then that's it. Underneath that we have this up gap from elections, and the moving averages are pretty far away, so it is possible that from here, if we do stay bullish, I would think that it would be sideways action, and if we do see some bearish momentum, then this 30-minute 200 moving average and 1 hour 200 moving average would be some targets to look for. And one more thing I'm noticing before we move on, the 35 EMA is underneath the implied move on the day. So that typically does tend to call out a flat or a down day. With all-time highs being so close, I feel like we might just see one more push before coming back in and testing some of these levels underneath. All right, so lastly, DIA. DIA, the implied move for tomorrow is between 437 and 449, and that is from options. And that is the implied move on the day, and then the implied move for the week is 434 to 447. So we have most of tomorrow's trading range within the implied move for the week. Just know that 447 is going to be a level. If we do push above all-time highs, that'll be the next level to look for here. And then 449 is definitely possible. I don't think it's very likely. We are starting to see some red momentum here. So that 35 EMA, in my opinion, is a much more likely target. And that is in the upper part of the implied move for the week. So it did come all the way up, which we're going to see tomorrow if that is the secret overbought signal. I'm telling you, I will be so excited if that is a signal we can use. So because it did pull into the green, I'm expecting a red day tomorrow and a pullback underneath the 35 EMA. Bottom of the implied move, 437. That is on the day. And then the bottom of the implied move for the week is 434. So there you have it, guys. Let me know what you think. Let me know what your game plan is. I'm not gonna lie, I personally think tomorrow we're gonna take a red day. And even now, just looking at VVIX right here, up 3.38%, I'm thinking we do see some downward pressure tomorrow. But of course, that is just my opinion. Don't trade my opinion, trade what you see in the chart. And have fun tomorrow, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.